Joining us now from Washington, Senator Jeff Merkley, member of the Senate Banking Committee and helping to craft financial reform on the Senate side. Senator Merkley, I have to say, the bill that was introduced by Senator Dodd, by far the best, the one that's the most honest, the one that makes the most sense, the one that really tries to deal with the underlying problem of no capital, no transparency, all the things that you know. How does the Senate make this bill, which has many loopholes still in it, better?
Well, really, we're working from the discussion draft that Senator Dodd put forward. The House has to be commended for getting a bill out, but there are pieces that need to be addressed. For example, proprietary trading was not addressed in the House bill. And we have other issues, whether or not we certainly curtailed the derivatives sufficiently to diminish the domino effect of one firm failing and affecting a number of other firms and creating the sort of crisis we've seen. There is a feature of the House bill I like a great deal, which is the limit of leverage to 15 to 1 for financially significant firms. That leverage ratio is something that triggered the Great Depression in 1929. That is an excessive leverage ratio. It triggered virtually every major financial crisis we've had in terms of the financial community has been excessive leverage, so that is an important feature.
You look at the politicians in this country, and you look at how much money they all get and have gotten over many years, decades now, from the financial services industry, and then you look at what we all know, which is the taxpayer support provided to those banks by the politicians. It's a tricky day when you've got to basically appear to reform Wall Street without destroying the profit centers for a business that's been rendered much lower profit margin by technology. In other words, they're creative. As long as they can create secret markets, they can make more money. As a politician, how do you reconcile the desire to protect those who donate? And I'm not saying this is you. I'm just looking at the whole government. It feels structural, and at the same time actually do the right thing.
Well, we have a huge obligation to the citizens of this country because the citizens ponied up their hard-earned tax money to help bail out Wall Street to a huge factor. Wall Street is now recovering, but we need to do things that now set us on a steady course for the future, and that's why Dodd's discussion draft was so significant and so helpful. And it particularly also had the Consumer Financial Protection Agency, and that agency is designed to end many of the tricks and traps, including the early deposits, the return of, what's the term, the yield spread premiums and the prepayment penalties in the mortgage market, which were a significant factor in triggering this. And by the way, the House bill takes those on, and that is a good deal.
Yeah. Where do you stand on a windfall profits tax for bank CEOs' profits not only this year but past years in creating this entire bubble?
Well, I'm very concerned about the banking community saying basically, hey, folks, normal Americans, average Americans, thanks for helping us now. We're going to now take home huge sacks of gold while you're still struggling with high unemployment. I hope that the president's conversation with the banking leaders is enough to convey the fact that we're all in this together and that citizens have helped out Wall Street, and now Wall Street needs to be respectful.
But that's all lovely, but these people were given billions of dollars, actually 23.9 trillion, I think it was total, to bail them out. The United Kingdom, windfall profits tax, because they know it was a windfall state support. Even France knows it was windfall state support. But we in America provide more windfall state support not only to our own financial institutions, but to every financial institution in the world. And now we put them on a path to be the most profitable they've ever been, and we're going to shame them. We don't want to take that back with a windfall profits tax.
Well, I'll take a look at the windfall profits tax. It's not a piece of the discussion draft we've been looking at. Most of the banks are paying back their funds. And so I'm much more concerned right now with setting the rules of the road so that our economy can prosper down the road, put people back to work, than necessarily trying to grab one little piece right now.
Understood. Senator Merkley, thank you so much for your time.